slow, or like a little bit more dead than usual?
Yeah, it's definitely still pretty dead. I mean,
Yeah.
like, when I was driving around with my friend the other day, like on Queen Street, and it was like a Wednesday, maybe at like 10 a.m., maybe it was like 11 a.m., and
Yeah.
you couldn't tell that it was a weekday. Like, it felt like a weekend, just kind of like
Yeah.
everyone was kind of chill. I don't know if you noticed, like, a lot of Queen Street and King Street now have kind of turned into patios. They closed like that first lane, right?
Yeah.
So a lot of restaurants are kind of sprawling out, and I mean, there's a lot less traffic, right? So
Yeah. Yeah,
it's
for sure.
interesting.
I do think that's kind of cool though too. Like especially with like the king and queen, like a lot of the urbanists have really talked about how they like that. And they like seeing that, like that's what a city should be like. You can walk. It's kind of cool to see like the restaurant scene or the businesses start to engulf the street. But I guess it's not exceptionally practical, especially in the Canadian climate.
Oh yeah, yeah. Like, I mean, once assuming things go back to full capacity again and back to normal, it won't. I don't think it'll continue, right? It's kind of a temporary thing, but yeah, it is cool, man. It kind of reminds you of like Europe, a lot of the European streets that don't allow cars to go by, or
Yeah, well, I guess a lot of those European cities, like they would have predated cars, right? So like they're not even designed for vehicle traffic.
Yeah.
And so, I mean, I lived in Switzerland for a little while, and I thought, yeah, it is cool, but the modern North American city, maybe with the exception of New York, is, and maybe like old Quebec and stuff like that. They're all designed for vehicles, so it's just got a completely different feel. But,
No, for sure. You mind if
cool.
I just grab a quick water really quick before we
Yeah,
go?
buddy, do your thing. So yeah, just as a little bit of background, obviously, I've moved away from the COVID theming, I would say, of the whole thing, but still just sticking with the Zoom format, just to be respectful of social distancing and stuff like that. And it also allows me to get a lot more content done. So and meet with people that I otherwise would potentially not have the opportunity to. I know you and I probably both have busy schedules, so it'd be a tough one to coordinate. So I guess from the top, if you're okay with it, if you could just give a brief introduction of yourself for those viewers that aren't familiar with you, and then we can kind of spiral out of control into our little investing discussion from there.
Yeah, for sure. First of all, thanks for kind of having me. I appreciate the opportunity
My pleasure.
to be on this show. And yeah, quick background about myself. Out of school, in school I took, we went to school together. I keep forgetting that.
Yeah.
At the University of Guelph.
Mm-hmm.
Accounting and finance. Out of school, I worked at Deloitte Consulting. Did my CPA. Have a pretty strong background in accounting, finance, and tax. Within about a couple of years, I jumped into entrepreneurship, quit my job, and started a PPC agency, a pay-per-click agency. It's basically managing paid campaigns on Google and Facebook for clients. Ran that for about 5 years. We won a bunch of awards for the work that we did, and we managed some large campaigns. And then after 5 years or so, started getting into more e-commerce, and with an e-commerce venture that started kind of growing, which is kind of where my focus is today. Along the way, I've invested in real estate, in startups, trying to get more involved into startups, and looking at different opportunities in tech and SaaS. And that's kind of where I think I'll probably be spending the next at least 5 years of my career is in that space. And so yeah, entrepreneur, investor, doing what I can to keep busy.
Good. I'm glad to hear it. And where did you cultivate the interest that you have in real estate along the way? Like, is it, I'm just out of curiosity, because I've noticed on Twitter, you have a lot of good stuff to say about the real estate space. So it's been of interest to me.
Yeah. I've always been interested in real estate. I mean, it's an asset class I think that pretty much anyone should pay attention to, because it's so big, and it's just like any other major asset class, like stocks and bonds. The way I view real estate, I mean, especially as an entrepreneur, it's an amazing hedge, right? Because almost everything else I do in my career, all my other investments, like especially in startups, are extremely risky and volatile.
Right.
And they have great growth value and great potential, but real estate has amazing terminal value, right? And so, in the long run, I view it kind of as a hedge. And I think any entrepreneur should have some sort of real estate in their net worth kind of
Yeah.
thing. And I'm not just talking about your primary residence, like income properties or cash flow properties. Like you should have exposure to both in your portfolio. And so, I view it as it's an amazing asset class, great hedge, it performs well during downturns, and it's something that like I try to kind of keep growing as my other stuff grows as well.
Yeah. No, it's smart to think about it that way, and I think it's been challenging for a lot of Canadians to see real estate from that perspective, because it's like it's not even the alternative asset philosophy here like that you would see in the US, and I guess you're maybe a little bit more familiar with that because of your experience in the tech space. But here it's like this is probably the primary driver of our economy and our GDP, right? And that's fine. I have no objection to that, but it's hard for a lot of people to see behind it or beyond it, and that when you think about, especially you mentioned principal residence, like a lot of people don't realize that prioritizing or commoditizing your principal residence and treating people like it's this investment vehicle, it changes the true nature of real estate a little bit, and that's where I think we've seen this like deviation from actual investment fundamentals, like negative cap rate condos and stuff like that. Whereas like a primary residence is a savings vehicle, and it does a damn good job at being a savings vehicle. Like where else are you going to get the leverage point and the interest rate that you're achieving on debt like that for the average Joe? And so a lot of Canadians, especially now we've seen the asset inflation, this is now the primary piece of their retirement. I guess one of the things that I really want to pick your brain on is, do you see the nature of real estate from that perspective changing as a result of innovation, urbanization, work from home, like any really big picture trends that you can see happening as a result of your experience in technology and the way that things are changing in the context of COVID, but also outside of it, like even prior to some assumptions that arose even prior to seeing this pandemic?
Yeah. I don't need to beat the dead horse with COVID and work from home. I'm sure there's tons of people that, have said great things about what the future is there. But I think in terms of technology broadly, like one thing that I think still hasn't really happened, but we're kind of getting there, is reducing the friction in real estate. Like I
Right.
still feel like in this day and age, like there's just so much friction to a real estate transaction. Things like title insurance, like with brokers and like lawyers and everything like that. And I think software, there's a lot of smart people working on different solutions. I don't feel like there's like a clear winner here to kind of make that real estate transaction that much smoother. Maybe it's something easier, something we're kind of that's kind of right under our nose. I think we'll maybe break out next year or so. But I really want to see, and I really think that maybe the next like 5-10 years, there will be software to help kind of reduce or eliminate that friction, whether it be title insurance, real estate lawyers, brokers, kind of make that transaction smoother. Have like software talking to other software to kind of make that like thing, like if you start a transaction, maybe you have like one company that specializes in title software or title insurance, and one that specializes in the legal part of it, kind of communicate with each other, try to get that deal done faster rather than humans kind of trying to go back and forth on a deal, right? How many deals have you done where it's just there's so much back and forth, and it's like, oh my god, if we could just kind of move this along quicker, we'd be able to get deals done kind of faster.
For sure.
That's one thing too. And I think it goes also down to leasing as well. Same kind of concept, but there's a lot of friction in leasing too, right? I mean, if you got you got to get a new tenant into your building, you got your property manager do credit checks, employment checks. Like if there was a way to kind of completely get that done in like one click of a button, like if the credit whatever the credit bureau can automatically kind of communicate with the
Yeah.
employment thing and just kind of get a qualified tenant in as quick as possible. I think that'll happen in the next like 5-10 years is less friction.
Yeah. Yeah. It's interesting. Like, and I mentioned this to you in our messages about, a couple of pieces of tech that I've been working on for similar things that you're describing. The challenge I would say with real estate is that you're going from like these legacy systems, and that are slowly evolving, and it's just such a fragmented market. Like I would agree with you that there are a variety of tasks that would be done much better by a computer or an algorithm than they would be by a realtor, like especially by a realtor, honestly. And so I have this like, but the challenge is that there's a lot of protectionism around the function of a realtor's job. It's, I would say, especially in Canada, but in the US as well. I think that they're by number the largest lobby group, and you can see it with Zillow. Like Zillow would have been the most disruptive thing to happen, and they ended up disrupting really was the real estate board and changing the monetization strategy of it by reallocating leads. So it's like, and then you see like companies like Purple Bricks or Comfrey or Property Guys, who they have a reasonable dent in the market, and they can do decent, let's say sub or micro market share and penetration. And like, there's a town in no Newfoundland, sorry, where the property guy, like they don't even have realtors. It's just like Property Guys. That's it, right? But at scale, it's a very difficult problem. And what you mentioned, that those creating an efficiency is so important because it's actually a quantifiable number. Like people are like, oh, what's like the actual market valuation of a company that could just completely disrupt the real estate transaction? Well, it's like take every single, if it's a meaningful enough platform, take every single transaction that's happened in Canada for the past year and take 5% of it. That's the value, right? Like, or even if you were to say, okay, we're seeing commission suppression and it's down to like 3.5%, it's still like, that's a huge amount of money. That is like real estate commission is functionally a drag on the market, right? Like you could argue that, and it's, yeah, it's due to be disrupted. It's just not easy to disrupt.
Totally agree, man.
Yeah.
And also like more transactions and faster transactions mean quicker price discovery too. Real
For
estate
sure.
prices kind of adjusting faster to market, market in the economy. So I think it'd be a net benefit overall. But you're right, with all these legacy systems and protectionism in play, it has been an uphill battle.
For sure. Like, I mean, even, we had built a booking engine a couple of years ago like, this is like 5 years ago, I built this booking engine. Right. But it was like, that was premature at this point. And now you're seeing like Showing Time, and I can't remember the other one. I guess Broker Bay seems to be doing probably the biggest in the Canadian market, like where they're kind of doing everything, but it's still like a legacy system. Like it's all done through email, like no push notifications on your phone. There is like, now you can tap to confirm. It just came out, like because of COVID and stuff. But I think like it's accelerated the adoption of tech a little bit, like because you're seeing people having to use DocuSign and stuff like that. But because of, at least in the Toronto or GTA market, the Treb integration of everything, it's like there's limited vendors. There's no free market around tech involvement in real estate. Yeah. So, I mean, it's an interesting one. I'd love to chat about it a little bit more, actually. Like, some of the stuff that we're working on, like, automated valuation. I have no objection to talking about it publicly, actually, because I think that there are things that are so challenging to solve. But that, and then also a patch that we just built and we're in beta with Facebook and Instagram to basically put, like, there's Instagram shops. They have that now for real estate, and nobody's using it. Like, if there's the back end exists, I'll show you. We can go into it later, but the back end exists and nobody's built the patch to automate the front end. So just like little things that, I mean, Facebook could very easily take a run at Zillow, and they have the captive audience, right? And most realtors use that platform to promote their listings anyway. I just thought it was interesting.
Just one more thing, actually, just around the topic of kind of trends and kind of what's going to get disrupted and whatnot. I was actually having a conversation with someone on Twitter the other day about a company called Invitation Homes.
Okay.
Have you heard of them
No, I haven't.
the US? They're very unique, and we have nothing like this in Canada. But they're massive. They're a large company. They're publicly traded. 30% of them, they're owned 30% by Blackstone Group, private equity
Okay.
company, and they literally buy, manage, and rent single family homes in metro areas. And they've now done this at scale. They're at 100,000 homes.
Nice.
And so the conversation was going around like basically if this actually like, starts to get larger and larger, and even, if it starts to, if an invitation home kind of decides to kind of grow in Canada, you effectively put a floor on real estate prices, and you might end up pricing out your, like you said, for your average mom and pop or individual, their kind of way to get real estate is a single family home to like live in or even just to rent out, right? And if you have these large companies kind of buying up all these profitable, depending if the yields make sense in these large metro areas, like what's that? That's, I think, a trend that I think might actually end up like being bigger than most people think that it would. Like,
Mm-hmm.
I think large companies will actually, and they buy, and there's pros and cons to it, right? Because they actually end up adding to the supply as well, because they actually construct homes from scratch.
Right.
But obviously, there's some major cons about a large company like owning like single family homes in like major metro areas. So it's something, yeah, it's pretty interesting to think about where that can go.
It is actually. That is a really. I just looked them up while you were mentioning it, and I mean, it's an interesting concept. And I remember, I guess it was like '08 when the crash happened, and Warren Buffett had sort of said like, I'm massively bullish on single family homes in the U.S. and if there was a way to purchase those at scale, I would do it. And all these models evolved basically just like pandering to Buffett, and I know he has involvement in quite a few of them, potentially that one as well.
Dude, I literally thought about that exact same interview when I saw that. Like,
Yeah.
I'm like, it wasn't Warren Buffett talking about this, and then meanwhile,
Yeah.
invitations like we're doing this. So
Yeah.
like,
Okay. Cool.
let
Done.
me do it.
Yeah. Watch this. Yeah, I think the challenge in Canada is the competitive landscape there, like with, you're competing with an irrational consumer, right? Like economics doesn't even really work especially in like the two premier markets in Toronto or in Canada, Toronto and Vancouver, because there are other people out there will like that model that you just described, as you mentioned, depends on a yield. And in Toronto, there are people who are buying without depending on a yield. So capital appreciation is fine, but also like it doesn't really work at scale for a company to be pumping more money into the asset to hope for and pray for capital appreciation. I can't see you satisfying shareholders like that, but there are sub markets in the GTA that could work, where you can go get your 5% plus capital appreciation. And I've seen similar models to that try to succeed, but it would be curious to see whether or not that could actually take shape. I think that we need to see some sort of reality check with the Canadian market, and I think that I have this curiosity around it, right? Because it's like if people are buying to lose money on some of these assets, even like some of the subdivisions up in York region in 2017 or condos now, there has to be an ulterior motive, right? And BC's been pretty strong about cracking down on money laundering, and we seem to have just forgotten about that discussion in Ontario. So I just have a curiosity around whether or not that's actually as rampant as some people might like to assume. Like when I think about negative cap rate condos, I'm like, there has to be another reason for somebody who's smart enough to be a multimillionaire to want to do this, right? Anyway, that's just my my little political injection there. I guess we can use that to pivot too, because like and you mentioned you bought real estate as a hedge, but I most of the investing stuff that I've seen you post on Twitter I've really liked, and I think that you have a brilliant mind towards that stuff. So what role does real estate play in your portfolio? Like, is it beyond just the hedge? Is it more from an income perspective? Is it just purely a hedge, or is it like are you hoping for a little bit of capital appreciation, or maybe add value or future development? Like, do you buy with intention beyond the hedge?
Yeah, good question. Good question. So the way I kind of view real estate is, yes, income play for sure. Obviously, having profitable income properties help, source of passive income, right? Whereas as an entrepreneur, your income could wildly fluctuate, right? And so that income piece there, I mean, again, it kind of serves as a hedge, right? But compared to like a lot of other people in real estate, I think I'm very different in that a lot of people are looking for value add for sure, like looking to kind of buy a property, kind of fix it up, like renovate, refinance, and kind of hold it. I'll be honest, like that's not my strategy at all,
Nice.
because I just don't have the time.
Yeah.
And real estate's not really my like primary focus. Like the way I look at real estate is it's a savings account, and it serves as a hedge. And so like I prefer to buy a property that's almost fully priced in, right, and or it's operating pretty well. It's profitable, cash flow, good tenants, good location, and then I can have like one property manager kind of manage that property. And so kind of go back to your question, yeah, so this is a hedge, a little bit of income, and I'm not really looking for crazy value add. Maybe some cosmetic stuff on the exterior, but I would never do like a full kind of gut job or reno. It's not my expertise, and it's not really something I want to kind of spend my time doing anyways. And so yeah, that's kind of, does that make sense?
Yeah, no, it does make a lot of sense. I like it. I like it. You're right. It does deviate from that. I guess it's because you're, and maybe this is an assumption, but because your exposure to the tech space, I guess you see a lot of the way that people operate in the US, and it sounds like your mentality is a lot less Canadian towards real estate. Like most people just think of it as like, I don't even know anymore, but it's like, it's this commodity that just like goes up in value infinitely. And, and I don't know, the whole thing is confusing to me, honestly, as somebody who really appreciates the fundamentals of investment and I'm in the trade of real estate. So it's kind of, it's been difficult for me.
It's one thing. Like another thing I'll add too is like
Yeah.
see, like people talk about like dollar cost averaging into stocks,
Yeah.
like
Yeah.
meaning like just keep buying an index
Yeah.
like regularly, like every put a percentage of your paycheck away, which is a fantastic strategy. But I also think people should be dollar cost averaging into real estate as well,
Yeah.
meaning like every year buy a really quality property and like kind of like just keep buying like
Yeah.
hold for a really long time. And so it's like one of the things I think that everyone should be doing is kind of quote unquote dollar cost averaging into
Yeah.
real estate.
I have the exact same philosophy, man. So I'm so glad you said that. And it goes in nicely to one of the things that you wanted me to discuss, which was sort of like, how would I advise people to, because, you and I might have income that is able to do that, but I would say the average consumer that is interested and as the timeline, like, if you're 30 years old, you could buy 10 properties by the time you're 40 and then retire maybe. Right. But most people, they don't feel like they can achieve that. And so the question is how do they? If you have a small amount of money and I say that there's a couple, it really depends. Most people have a hard time thinking about real estate outside of urban cores. So the first one, my first example would be, don't buy in an urban area, or don't buy in even within proximity to an urban agglomeration. Like it doesn't have to be in the greater golden horseshoe. But because especially most of the clients that I interact with, young people, are there and they're detached from the idea of suburban or rural areas. You don't even think about it. Right. But there's so much, and my conversation with Francis Donald last week made this exceptionally clear to me that, there's so much that our economy needs to do to diversify beyond housing. And now you're hearing a guy like Elon Musk talking about how he anticipates a silver scarcity. A nickel scarcity. You see silver and gold, two resources that Canada can do really well, accelerating like crazy in this economy. And whether or not that sustains doesn't really matter. What matters is that there are entire economies, microeconomies in this country built around the extraction of those resources. Kirkland Lake, Sudbury, these are places that you think about. Now I can't remember the name of the place in the north of Alberta. There, a lot of my buddies moved out. Fort Mac, I guess. Fort McMurray.
Yeah.
Just boom during oil times, and now obviously like that whole province is seeing an economic struggle as a result. But I guess the question or the philosophy that I have is we could see a similar patterning around employment migration, et cetera, as the finance sector and tech sector of the Canadian economy could see some headwinds for the next 5 years and we start going in search of things, like there's a ton of engineering jobs up there, like good STEM careers in around the resource extraction and timber as well. Like, so that would be at number one. And that was a really, really long-winded way for me to answer that question. And then number two would just be basically become a shareholder in a project and work with like basically an investment group. If you still want the urban exposure, but you can't afford it, buy into a good property every couple of years. And that's, again, like something that you and I could discuss on or off screen, but I would say there are a lot of opportunities. It's always tough to sell equity without being like without playing the risk there. But there are, if you talk to, a well-established realtor or lender or whatever in the GTA real estate space, they can probably strap you to a deal in a LP position pretty easily, I would say. So that's my sort of answer for anybody listening who doesn't have the means to go buy a property in Newmarket or downtown Toronto every year. When you think about real estate, I guess more on your the hedge piece, what do you, because I think one of my jobs when I'm working with investors is analyzing what is the downside risk of real estate specifically. And I honestly do see a little bit of headwind, maybe not so much for the suburban areas now, but just for the macro. When you look at the real estate space, where do you see not only risk, but opportunity? Like what's your outlook on the next 1 year, 5 year, 10-year horizon, beyond the sort of always goes up philosophy, which I think is relatively time tested and true?
Yeah. I mean, it's hard to really speculate anything that happens like 1 to 5 years, right? Like, I mean, you're anyone's guess is as good as mine. It's hard to always, it's hard to really say like whether markets will go up or down. Like, timing the market, whether it's stocks or real estate is most people can't do it, right? So, I mean, if you take a 10, 15-year time frame, um,
Sorry, I'm losing you here. I'm just
your
gonna
biggest thing is there. Oh,
sorry.
can you hear me?
I can now. Yeah, I don't know. My connection just lagged there. Just wondering if you could repeat what you just said. 10 to 15 year time frame.
Yeah, I mean, like if you look at real estate and you have 10 to 15 plus time frame, like the risks are pretty small. I mean, like you said, it's time tested. I mean, asset inflation is there. With interest rates where they are, I really can't see anyone really losing money on real estate. If you have that kind of long period of time, right? Like, but within like under 5 years, like, I don't know. Like, it's anything I say is pure speculation. I mean, there could be a correction, there could be a crash.
Yeah.
Like I don't feel like we felt really the after effects of COVID yet. Sure. I felt like COVID kind of happened, and it's like all the economic indicators, except for maybe the unemployment rate, seems like they've bounced back. I mean, I'm looking at different stock indexes and different earnings figures, and just doesn't feel like we've kind of I feel like there's got to be an aftershock that's gonna happen of all these people not working for 4 months and potentially laid off forever. Business is kind of closing down, and so I mean, that's probably a risk that there will be some sort of whack to real estate prices in the next 5 years or so. I'm not really sure. But yeah, I mean, in terms of opportunities, I think you're right, man. I think I think we were talking about this the other day. You were telling me how you got to go outside of the urban areas. I think people will sprawl out more. Definitely. I've had a lot of friends that have, now who are die hard. We got to live in the city, forever kind of thing. Now they're maybe we should start moving out, to more of the countryside, right? The cottage area kind of thing. It seems like it's a better, now that I can work remotely, why not, right? So I think that'll definitely be a trend. Real estate will sprawl out a little bit.
Yeah, it's tough given like the planning environment right now, like with the Places to Grow Act aimed so much at density in Ontario. Like I think they're really gonna have to reconfigure that thought process. I actually really am hopeful for the urban area. Like Toronto was, really just reaching its breakout point as a city on the global scale, and maybe now with New York suffering so much as a result of like a lot of the sort of decimation of the office economy, it could play a bigger role. Like, and with like the Fed claiming that they're willing to backstop a lot of these distressed assets, like I think when you talk about the macro office vacancy, and I guess the way that the macro affects the micro, if referring to Toronto specifically, like when you start to see work from home and office vacancy and things like that, um, I think that there could be a lot of short-term challenges but ultimately I think in the fullness of time, we're going to have a longing for this normal life, and whether or not maybe like I don't see people being like, oh, we got it wrong with this whole like city thing. Like, now let's just all go out and live and we'll just leave these places vacant, like whatever. I don't see that really happening. But I do think it's really changed the way that we think about work and work-life balance and quality of life and where we live. And, there were a lot of people that were making sacrifices around those things to be in close proximity to work so they could get ahead and then maybe enjoy it later. The other piece is like, millennials haven't started having kids at scale yet. Like, and every millennial parent that I know has moved out of the city. I'm not like saying that that's a systemic trend, but that's something that we also need to be aware of, is that like most of us are going to experience either biological or physiological, psychological changes that'll make us want to live differently, probably in, a couple of years. That and that might not have been priced into the urban economy, especially the urban real estate economy yet. We'll see. I'm very curious to see how it all plays out, and I think about it constantly. So,
Me too.
so have you invested in property? Like I'm actually right now in the middle of my first deal, out like way outside of the GTA. I'm trying to get some exposure to, like, I'm really, really bullish on the resource economy in Canada, Sudbury, even Kirkland Lake, to be honest with you. And I mean, Kirkland Lake, you can go buy a property at a 10 cap for 70 grand, right? Like, yeah. So things like that, like, I've just been trying to figure out a way to formulate an investment thesis around places that, nobody's ever even heard of. And maybe bring it to market. Have you done any exploration outside of the GTA? Are you still? I know when you mentioned properties to me, you're pretty focused on the suburban environment. Just curious as to whether or not that's changed since we discussed it last.
Honestly, it hasn't changed. It's intriguing, and whenever you talk about it, I'm always like, wow, that's crazy, man. Like that's like there's like I kind of fall into that category that you mentioned earlier. People kind of thinking that real estate is just kind of urban metro kind of area.
Yeah.
Like even though like my holdings aren't even in like downtown Toronto, I still consider it pretty metro, right? It's a quick subway or a quick train down to the city.
Mm-hmm.
I haven't honestly looked outside for the GTA, and I know there's probably a ton of opportunities. I mean, you're probably way well suited to talk about that than I am.
Yeah, maybe. I just I'm sort of really in the infancy of my discovery of that, but I haven't felt like anybody's really doing a good job at creating a scale. And I know that, like, in the US, like there's a lot of these sort of like D, like your C or D class investment funds that kill it, like absolutely kill it. I mean, they're probably getting smoked right now, but they did really well. And I think that Canada hasn't really, like, when you talk about like this, massive scale or systematization of purchasing, I do think yield first when it comes to that. And especially when I think about these far out areas, you don't have to manage downside risk in a place like Kirkland Lake. Like the property's not going to lose value. You're literally, if you're buying like a house for 70 grand, you're literally buying it at negative $250,000 land value. Right. So there's like very little downside risk. the risk is liquidity, right? It's like, okay, if this thing vacates or if I can't rent it, and I'm not going to be able to, like, it's going to take me a year to sell the property, right? You don't, how much can you afford to be stuck with 100 of those,
Right.
right? And it's, and then when you also talked about like that invitation homes and creating a price floor, one of the other things that I think that a lot of people discount for, and the reason I'm in touch with it is because I have such an interest in affordable housing, is the price floor right now is set by welfare, essentially. And I've been trying to do a lot of research around this, and like actually made some proposals to academia to try and create a real model around how that works in Canada. But basically the baseline amount of money that you can get as a non-working Canadian is the same everywhere, right? So and so you're starting to see this drive till you qualify effect, because once you don't have to can participate in the economy and need to be close to employment, you can functionally afford to live anywhere, but you can't afford to live in places where there's scarcity of housing. So
Right.
that's where you're going to, from my perspective, you're going to see a lot of unindexed pensions or pensions that aren't sufficient for, people who are on CPP only. And a lot of these people aren't going to have to, or aren't going to be able to stay close to the city. Right. And so to me, when I think about the migration of, and the further that we exacerbate the wealth disparity that's happening as a result of asset inflation, the more demand that there becomes for affordable housing, right? So that's like that's sort of my philosophy on the ruralization of the Canadian real estate economy. I really hope I'm right, because I'm gonna be throwing some big dollars at it over the next year or so. So it's kind of it's a big Hail Mary, but who knows?
Hey man, big bold moves. That's what's gonna pay off, right? So
Yeah. Is there was a couple of things that you wanted to chat about? I have them in front of me here, but is there anything that we discussed that or didn't discuss that you wanted to? I did want to touch a little bit on prop tech, given your experience, but I don't know how much, like, just experience in the tech space, but I don't know how familiar you are with a lot of that stuff and the role that it's playing sort of in the COVID world around office towers, et cetera.
Prop tech, I honestly, I don't have any direct investments in prop tech or anything like that. But one thing I do see, I think I'd be pretty bullish on is, so I do think work from home is going to be like a real thing. Like, I think, like, it's not going to be like black or white, but there's going to be like a lot of people that are that will be kind of permanently working from home afterwards, like offices being kind of closed down. So what I do see happening is, like, I'm bullish on the side gig economy.
Yeah.
So platforms that enable people to earn an income outside of their work, because now you got to think about, people are going to be home and they're not going to be under the watchful eye of their employer, and which means that they may realize that, holy, I can get my job done in like 3-4 hours, 5 hours, and then have like the rest of the day to kind of work on my side gig. So there's companies like Substack that do the paid newsletter. Obviously this is Shopify's of the world, Etsy. Like there's I think there's any startup that's kind of that is kind of enabling people to earn an income outside of their work. I think I'd be bullish on. I'd be definitely seeing them all kind of going places. I think that'll be a trend, people having side gigs.
Yeah. That's actually a really interesting note, given the current economy, that I didn't really think about. So I appreciate that insight. So in regards to the real estate stuff, you had mentioned, just, some investing lesson. I'm just gonna pull it up here in our Twitter message thread, but, just like, I guess we went over how can young investors do the sort of dollar cost averaging philosophy that you mentioned. And I would agree. I think one of the things that a lot of, like, people always talk about real estate and they're like, oh, you're never going to get, 90x or 20x leverage or 25x leverage in anywhere else. And it's like, well, you kind of can. You can go get that leverage in gold, based on juniors. The risk profile is pretty well the same. The other thing that people never talk about when we're talking about low interest rates is your effective annual rate, right? Like, this is a really important calculation, because like you're paying like 40% of your principal or your mortgage payment into interest in your first like year of your mortgage, right? So you're not like, okay, it sounds great that you're paying like 2% interest or whatever, but when it's amortized over, so they apply that to the entirety of the mortgage and then they cram it into 5 years.
Right.
So it's like, yeah, your capital cost is actually not as enticing as it sounds on paper, right? So that's just one thing that I've always seen dismissed by people. And that's why for me, and the one reason why I mentioned, buying in cheaper areas where you can get a greater cash on cash return is for people who are young and just starting out. And I had this conversation with a colleague of mine who I'm going to probably be posting shortly. I just was like my thought process, my head was all over the place. I don't get interviewed well. I guess but anyway, you can boost one of the important parts is, okay, you've got the price piece, but you've also got the income piece. And those are the two important parts on how you can qualify for a mortgage. If you can't change the price piece, you got to change the income piece. And one of the ways that you can do that is go buy properties in places where you can eventually have a big enough portfolio that you can now use that income towards your income. So let's say you want to invest in the GTA, but you can't right now. Well, that doesn't mean you don't have to have any exposure to real estate. It means you should go get exposure to real estate for the time being. So you have your hedge against values going up. So they're not running away from you faster than you can grow your income, and you're growing your income because you are investing in 10 caps, right? So now all of a sudden you have 50% margin above your 50% profit margin, and all of that goes to your accounting. And then when you go to apply for a mortgage the next year, your income's better. And then the year after that, and it compounds, right? And then in 5 years, now you can buy a way better property than you ever could have in Toronto, right? And maybe that's when that's the thing that I've always had a hard time. So many people want to wait, and it's like, it's not timing the market, it's time in the market, right? And I think you kind of said that in fewer words too. So that's sort of like my big thing, and it kind of covers, I would say, like the biggest lesson that I learned, and also the biggest mistake that I see a lot of investors making is they're just like, oh, if I can't afford it in Toronto, I'll keep saving up. And it's like, well, no, that price is running away from you fast. If your income's not growing, or if you're not a super saver, you might not ever be buying that property. So figure out another way to make money with your money in the meantime. Don't just let it sit there, even if it's in stocks, like whatever, right? So.
Yeah. No, that's a good way to put it, man. Like I always that's a common question I get a lot from followers, and I never really know what to say other than you gotta find you gotta find ways to increase your income, right? Yeah. I mean, like I hate to say it, that's kind of it's not what people want to hear, but you can run your side gigs, for example. A lot of ways you can kind of make money outside of your day job, and like focus your weekends and your nights on figuring out how to make extra money to kind of save up for that down payment kind of thing. That's what I tell most people. There's also I've seen people talk about creative ways of getting into real estate too, like making like deals with like seller financing, or trying to get like a deal with the developer or management, or getting investors kind of thing, like other creative kind of ways to kind of wedge their way into real estate as well if they don't have the money, right? And so you can do that too. Obviously, all those are very time consuming as well, but yeah, you're right, man. I mean, you got to I think I agree. It's better to, buy real estate and wait than wait to buy, right? So
yeah, for sure. Yeah. And I guess, I think there's other ways to do that. Like a lot of people they don't focus on like the passiveness of it, right? Like I remember a couple of years ago, it would have been a while ago, like before the big boom of Bitcoin, like I'd bought a couple of Antminer S9s, right? And I was just like, this is a way for me to basically buy something that I can, and maybe I should be careful saying this, but like, I could basically expense as like technology for my office, which I actually ultimately didn't end up doing, but like that was my thought process. It was like, okay, this is tax deductible that I can convert into basically non-tax deductible currency, right? And so, but regardless, it's like, okay, so back then before the boom, I think I paid like 1,400 or $2,000 maybe for an S9, brand new, a couple of them. And like and before the boom and before the hash rate went up, it was like producing, like they've paid for themselves a couple times over. And now like the electricity trade-off isn't really that good, but still, I still run them, and it is what it is, right? Like that, but that's a truly passive income stream, right? And then it's like, or I'll throw some money at like some e-com businesses, that friends have started or whatever. It's like, yeah, just give me my yield. And like, yeah, I'll throw a little bit of money at that. I would say, and you mentioned like, finding more income streams. My parents and I think our parents' generation, boomers, like they were all about focus, right? It's like, do your job well and and then save your money. But that I don't think that works anymore for young people. And you say like, you always see these like memes on like the motivational Instagram and Twitter pages, like the average millionaire has like 7 streams of income or whatever. And it's like, okay, like that's cool. but like, what's an actual feasible way to do that, right? So for me, it's been like the crypto mining worked reasonably well, and again, I had a decent market timing, and then yeah, buying like cheap cash positive rentals with low risk, like with good long-term tenants in areas that I can afford has been good. And then also creating efficiency around, and that's one of the things I really wanted to discuss with you as well, like automating tasks, hiring employees to do some of the stuff that I'm not that good at, or I hire a ton of freelancers, to do a lot of that stuff, calling, follow up, warm calls, whatever, just to keep like, and so that's, I guess in the piece where you had asked, like, if I could put my entire net worth into one company, and I don't want to sound like an egotist here, but like it would be my own, honestly, right now. And that's functionally what I'm doing, right? It's because like there are people who are way smarter than me, but I'm paying unless I could get it at a fair value. Like if I could buy into like Tesla at a super fair value, non-inflated value, I would, and that would be the answer, or there would be other answers like Amazon, whatever, but you're buying them at, 50, 70x PE, right? So, I know I'm buying into my own business at a very fair value because I'm controlling it, and it's a function of my expertise and my work ethic, right? And I
Good answer.
can very much control the ROI. So,
Yeah.
yeah, I guess that's kind of maybe a shitty answer to that question, but yeah.
I mean, it's a good answer.
What would
It
yours
means
be?
you're confident in
Like,
what you do.
how would you allocate? Like, what would your portfolio look like right now, your personal, and then and as comfortably as you are, obviously I don't want to dive in too much to your personal finances, and then where would you be putting your money right now if you could?
Same as you. I mean, my own businesses, right? I mean, like
Yeah.
I asked that question meaning like, like what like large company would you be so bullish on? But yeah, that's cool. That's a good way to answer it too. Like your
Well,
own
like I
company,
guess
because
then I would be hunting for like a obscenely high dividend company, or like a company right now that's valuation is still smoked, where their dividend is high based on what it was before COVID, and I have the faith that their ability to recover into that dividend is strong. So like I bought some Carnival during the crash. I've actually bought a little bit more even. And like, again, that to me is like a 10 to 20 year hold, right? Even movie theaters, although I don't believe that much in their recovery, but the dividend yield is good. Like I think like some of them are at like a 7%. I bought New York Mortgage Trust when their dividend yield was like 37%. And like it's been revised down to like 7%. But if they ever get back up to that, like $6 in their dividend yield, then based on what I purchased it for at like $1 or something, I can get that 20% yield. That's like a good way to manage the downside risk. If the trade pays for itself after a year of owning it, you're good, right? Like, or a couple years of owning it. So I guess that's that answer, but I'm curious to know yours. Sorry. So I apologize for interrupting you.
so no worries. So I mean, like in terms of if I had to choose one company, obviously I would invest in my own, right? I mean,
Yeah.
that's like a no-brainer. But oftentimes you don't see opportunities to invest in your own company, or you end up kind of taking on projects in your company that aren't positive ROI. Okay, before I get to like what public company I'd invest in, I'll tell you a story that is an example, I guess, of investing in my own company. But I looked at it as just sheer luck. But my partner, looking back, said, "Well, you just invest in yourself, in your own company, and paid off." But about a year ago, I was an LP in a long short equity hedge fund,
Okay.
and I had been for about 5 years. It's quite a long time. I didn't really have any reason to kind of cash out. Although I was considering maybe shifting it more to passive type investing. I mean, those kind of fund fees are quite high, and returns are pretty kind of like average. And so, anyways, about a year ago, my e-commerce company got into a pretty serious cash crunch and needed to be bailed out pretty quickly, right? And so, it was a combination of a couple bad decisions and inventory. So it's really easy to get into a cash crunch when you're running a physical goods business. And so, anyways, I needed to inject about it was close to about $100,000 into the company. And so, I was looking at, like, should I put, cash here? Like, I was trying to figure out what should I liquidate. So I ended up actually just liquidating the position in the fund, the hedge fund. and putting all that money into my e-commerce company. Now at the time, it was such a rough decision. I was like, oh my god! Like I took money out of like a hard asset like stocks, right? And put it into such a risky asset like my small e-commerce business, right? And like I got like in my head, I was like, I'm gonna lose all this money. This is insane. There was no end in sight in terms of like the bleeding. Fast forward a year later, and by the way, when I invested into the e-commerce company, I was charging interest, right? A normal interest rate. Fast forward a year later, that hedge fund basically blew up in COVID because of COVID. It dropped 40% in a month, and it hasn't recovered today. It's still down 40% roughly. And my e-commerce company actually was able to pay me back all the money within that year and interest, right? And so when I was explaining this to my partner, I was like, I think I just got lucky. Like this was just like I'm like I can't I just happened to COVID happened, this fund blew up. But he said, well, I don't see it like that. I look at it like you invest in your own business, you to control, and you're able to kind of it paid off. And so I don't know if that's you want to conclude that as luck or whatever, but I mean, you're talking about investing in your own business. That's a good story of it actually paying off. Right?
No, it's great. Actually, I think it's a good example also of investing in things that you understand, right? Like I there are so many companies I would love to get a better understanding of, but like I just don't have the bandwidth right now to dive in. And like, so I'll throw a little bit of money at it and whatever. But ultimately, I think you pulled out of something that probably was, you needed somebody else and you were paying them serious fees to manage and get you exposure to that investment thesis. But you took it out and put it into an investment thesis that you understood very well. And, and I think that that's an important principle. Like that's a Buffett principle as well, right? Don't invest in things that you don't understand. So anyway, Absolutely. I'll let you continue on to your large cap or index traded company.
If I had to choose one public company, it'd probably be a toss up between either Amazon or Google. And I know the valuations, you can kind of say they're crazy and whatever, Ford multiple. But honestly, like both of these companies basically control like an unregulated monopoly. Like there's nothing that's going to stop either of them other than government regulations. And if the government does step in and end up kind of breaking them up into different parts, I mean, you still have, a lot of the individual parts are still pretty damn valuable. If you had Amazon and it got broken up into like AWS and it got, their e-commerce was here and like all the other stuff was here. I mean, each one of their individual parts are all pretty damn profitable and viable on their own. So it'd still be like an amazing investment, even if it was broken up. They think about the amount of infrastructure Amazon has now between their cloud services and between their e-commerce. That is really hard to replicate, man. Like it's like without something fundamentally changing in the way we consume information or goods or whatnot, that's not going to change. And Google on the flip side, same thing. They have the Google Cloud service that's kind of rapidly growing year over year. But they have their search their search function, which is like miles better than anything else out there, right? They've kind of achieved this monopoly of search just by having an incredibly good product, right? They don't have network effects or economies of scale or really anything like that. Each year, the algorithm keeps getting better and better. And I think the way people look at Google is a bit different than the way I think I look at Google. Like a lot of people look at Google as like a company that has a bunch of traffic and they sell ads and they're like a digital ads like a sales company. I don't look at it like that at all. I look at it as they own the only road, the most valuable road on the internet, which is the road that has what I call monetary intent traffic. Basically, people looking to buy stuff. That are browsing. They have a monopoly on that road, and they're charging businesses a tax to use that road. They're
the traffic cop and the toll booth.
Exactly, and so it's a very profitable business.
It's interesting. There's a tie in there, like on the real estate space as well, that we've been trying to work on, like the product, because I think that both Facebook and Google have a pretty solid. And I'm gonna have to run here. I think I heard my 12 o'clock coming into the house, but I think that the tie-in from the traditional MLS system into Facebook and to Google with their shopping, like especially with Google, like if you search like homes for sale in Toronto, if you search like a t-shirt and it shows up like all those shopping ads, and I'm assuming those are affiliate links from Google. hasn't been done yet with property. And the same thing with Facebook shopping, and Facebook shopping just did build that integration. So that's honestly something I'd actually really love to work on with you if it's something you're interested in, especially on the Google side, because the Facebook one we've already built the patch. We're just in beta with it right now. Like, we've been rejected by like 5 or 10 different pages that we've tried. They really want to see like a business page, like not a personal page, running this patch. So a lot of it's just arguing with Facebook support, which is, I'm sure you've dealt with, is not too exciting.
Oh, brutal.
Yeah. So yeah. Anyway, honestly, like, I feel like I could have this discussion for another like 2 hours. But unfortunately, I do have a hard cap here, and I want to be respectful of your time as well. Do you? Is there anything that you want to discuss before we sign off? And if not, where can people reach you if they want to continue this conversation or have any questions about some of the stuff we've talked about?
Yeah, I mean, nothing else to discuss. I think it's great what you're doing. I mean, with your podcast and all the digital stuff, the content that you're putting out there, you know what I mean? Like,
thanks, man.
A lot of people have this perception that real estate is kind of boring and, you know, don't really want to get into it, but I think you're making it fun. So
thanks,
good job. Good for you. To contact me, you know, you probably hit me up on Twitter, jvastdigital, at jvastdigital. And
yeah, I can put it in the show notes.
DMs, yeah, my DMs are open, and
cool.
I reply them at least every day. So
amazing, man. Okay, cool. Yeah, I really appreciate what you're doing as well, man. Like, honestly, you've really helped to shed light on a very confusing world of investment in the full spectrum, I would say, for young people. And I think that brought a lot of value to me. Like, your feed has been super valuable, and that's why I was very excited to pick your brain. I know you did want to talk a little bit more about the macro stuff, but maybe we can save that and do we can circle back in like a month or something and do another episode.
That sounds good to me.
Okay, buddy. Thanks a lot for your time, man. I really appreciate it. I'll flip you over a DM as well about the couple of things that we did mention on here, and see if we can maybe get working together on some of those things.
Sounds good, Daniel. Look out
for it.
All right,
buddy. Thanks again for your time.
Thank
Take
you.
care.